Imagine investing all your retirement money and having it disappear. That's what Joe White said happened to him after he put his savings in a crypto platform. Now a state financial watchdog agency said the company where Joe and thousands of others invested wasn't licensed to operate in California at the time.
It's incredibly powerful.
Joe White spent a long career working for several startups.
I think it's over 10 startups I worked at, and then it's like a numbers game, and then finally I got a good exit.
He used the money he earned to invest and plan for retirement.
So I learned about Nexo from Reddit, and then a coworker introduced me to them.
It's a digital platform for crypto that advertises it helps users grow your wealth. Joe thought the money would be safe in what Nexo called a crypto credit line. With crypto-backed credit lines, borrowers can take out loans backed by their crypto instead of selling it off. You can then repay whenever you want in any amount and at your own pace. In 2021, Joe said he transferred his crypto investments to Nexo, which operates several entities. It says on its website the credit line can be used as part of a longer-term strategy. Joe said he put his life savings into Nexo. He showed me at least one bank wire transfer to Nexo in the amount of $1 million. He doesn't have records of all his transactions, and that became part of the problem. Joe said he would occasionally withdraw money for normal living expenses, but by 2023, he said he lost nearly all the money he put in. He said the investment was something a lot more volatile than he realized. Essentially, if the crypto's value dropped below a certain level, Nexo could liquidate it. That's what Joe said happened with his account. He has an active, open complaint with California's Department of Financial Protection and Innovation alleging this.
Right, so think about if you have a home equity line and the value of your house drops due to market conditions, you don't expect to lose your house, right? But that's what happened is that the market dropped, which happens, it goes up and down, but I didn't know I was subject to that, so I didn't think about it being a problem.
He didn't realize liquidation could be one of the outcomes. Joe said he reported what happened to him to numerous agencies, including the DFPI, the District Attorney's Office, and the Federal Trade Commission. The DFPI found Nexo Capital violated state laws, including offering crypto-backed loans and services without a valid license here in California. In January, it issued this consent order, an agreement with the company. It said the company conducted unlicensed finance lending activity. The DFPI wrote Nexo violated the law by contracting for and originating loans with 5,456 California residents without the proper license between 2018 and 2022. If the market value of the crypto collateral drops, the DFPI said Nexo Capital could automatically liquidate it. The order doesn't name specific investors, but Joe said what it describes is what happened to him.
How have you been able to deal with the situation over the past few years?
It's been incredibly hard. For a long time, I dealt with it myself. Only recently to ask my sister to help me because it was just too much. And after 3 years, it literally almost killed me.
Joe showed me a screenshot from his account. November 2021, his portfolio balance grew to as much as $6 million. Now he said he has nothing besides his family. His sister with him for support during our interview.
I can't care for my parents like I want to. So my daughter's been lending me money to help pay for my parents, so it's just been really tough.
The DFPI fined Nexo $500,000. According to the consent order, the company neither admits nor denies the findings. A Nexo spokesperson said the consent order relates to legacy issues from an earlier phase of the business in 2022 and was resolved through a settlement. After resolving this, Nexo is keeping its California license. I also asked about Joe's situation. The spokesperson told me detailed risk disclosures are presented across all product offerings and client-facing materials. She also said the credit line product is not currently available in California, but that it does include clear guidance about the risks. Joe's biggest obstacle to recovering any money is that he can't access his records from the company. Nexo has several entities worldwide. Joe said that makes it confusing to investors. When trying to get his financial records, he discovered Nexo Capital is based in the Cayman Islands. Nexo's financial products have faced regulatory action across the country. The SEC also took action against the company. In 2023, Nexo agreed to pay $22.5 million in penalties to settle the charges of failing to register one of its crypto products, bypassing essential disclosure requirements designed to protect investors.
Anything can happen when things aren't fully regulated or they're newer trends.
I spoke with Ashley Russo, a wealth management advisor. She said people need to proceed with caution when getting into crypto, especially for retirement.
Crypto is associated with volatility, right? With it being a newer asset in the marketplace. So do we want to put something that we need to depend on, something we need to know is there? Do we want to take on that level of risk?
Joe doesn't know if he'll ever see his money again.
As difficult as it is for you, why did you feel it was important to share your story with everyone?
The company that I'm dealing with has structured their operations in a way to make it very hard when something goes wrong. The takeaways here are be careful.
And Nexo has been around since 2018. According to its website, it has processed more than $430 billion. I cover consumer advocacy issues. If you do have a story idea for me, you can scan that QR code there on your screen, or you can email me, melissa.masiha@10news.com.